What are some safe investments that can offer stability, income, and diversification in a debt ceiling crisis? A debt ceiling crisis is a situation where the U.S. government cannot borrow more money to pay its bills because Congress has not raised the legal limit on its debt. This could lead to a default on some of its obligations, such as interest payments on Treasury bonds, Social Security benefits, and military salaries. A default could have serious consequences for the economy and the financial markets, such as lower growth, higher interest rates, and lower credit ratings. So, how can you protect your portfolio from such a scenario? Here are some ideas. Keep some cash on hand. Cash is king in times of uncertainty and volatility. Having some cash in your bank account or money market fund can help you cover your expenses and avoid selling your investments at a loss. Cash also gives you flexibility to take advantage of buying opportunities when the market recovers. Consider short-term Treasury bills. Treasury bills are short-term debt instruments issued by the U.S. government that mature in less than a year. They are considered to be very safe because they are backed by the full faith and credit of the United States. Even if the U.S. defaults on some of its longer-term debt, it is unlikely to default on its short-term debt because it can roll it over or use its cash reserves to pay it off. Treasury bills also offer some income and liquidity, as they can be easily bought and sold in the market. Diversify into other asset classes. While U.S. stocks and bonds may suffer in a debt ceiling crisis, other asset classes may perform better or provide some cushion. For example, you may want to invest in some foreign stocks and bonds that are less exposed to the U.S. political risk and may benefit from a weaker dollar. You may also want to invest in some alternative assets, such as gold, commodities, real estate, or cryptocurrencies, that may hedge against inflation or currency devaluation. Be ready to buy the dip. A debt ceiling crisis may create panic and fear in the market, but it may also create opportunities for long-term investors who have a strong stomach and a clear vision. If you believe that the U.S. will eventually resolve its debt problem and avoid a default, you may want to buy some quality stocks or bonds that are undervalued or oversold during the crisis. You may also want to rebalance your portfolio to maintain your desired asset allocation and risk level. These are some of the ways you can find safe investments in a debt ceiling crisis. Remember that no investment is risk-free, and you should always do your own research and consult a professional before making any investment decisions.